Good morning and welcome to Talking Ball. It's episode number 626, I think, and the date today is June the 14th, 2022. It's Jamie and Steve here. One more day to go, Jamie, before uh, Grandmaster Joe returns.
Grandmaster Joe, I'm sure he'll like that. Yeah, no,
Yeah,
looking forward to having Joe back. He's always had a busy week, I'm sure. But it'll
yeah,
be nice to have him back tomorrow.
yeah. He's had a little bit of a holiday and a little bit of a work-related event as well. So he can fill us in on that. Let us know how that went. And yeah, and as we continue into, I think I called it Twister Tuesday today. The market's got a real sort of like big sell-off yesterday. We've had a bit of a pullback overnight. We're going to take a look at the technicals behind that, but we'll dive into news headlines first. Have a little look at what is going on from the fundamental and geopolitical perspective. There's a big shift in Federal Reserve rate expectations on Monday as aftershocks continued following Friday's inflation data and a 40-year high for the headline rate at 8.6%. That was in my lifetime, actually, Jamie. 40 years. Wow. Ahead of
Wow.
Wednesday's Federal Reserve policy decision, there was a big move in futures, with markets indicating that the chances of a 75 basis points, that's 0.75%, in the Fed funds rate to 1.75 had increased to over 95% from 30% earlier in the day. So that looks like pretty much a given. Looking for a 0.75% rate rise at the next meeting. Um, US bond yields also moved higher, further selling in US treasuries, especially at the longer end, with a 10-year yield moving to 3.35%. So we've hung around that 3% level for such a long time. Resistance, 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 and we've smashed through it. This is the highest level for over 10 years. There was a net flattening of the yield curve. That's when the 2-year and the 10-year starting to flatten. Wall Street slide continued. Equities came under heavy selling pressure during the day with the sharp losses for major indices. Fears over more aggressive Fed tightening undermining support and unease over the risk of recession also sapped support amid a flatter yield curve. The S&P index declined nearly 4% on the day, losing all of 2021 gains and entering bear market territory. Futures look to correct higher on Tuesday, so we've seen a little bit of a pullback overnight, as I say. Dollar hits 19-year high, high yields, and the shift in Fed expectations boosted the dollar, while there was also a significant element of defensive demand as risk appetite deteriorated. Dollar index posted a marginal new 19-year high, just above 105 level before a slight correction on Tuesday. And the UK employment rate increased to 3.8% in 3 months to April from 3.7%, but there was a larger than expected employment increase. Headline average earnings growth slowed to 6.8 from 7 and below expectations of 7.5, while the underlying wages increase held at 4.2 and above expectations of 4%. So that's pretty much it from the headlines. Let's dive into the charts. So first one I'll look at today, I'll take a look at Bitcoin, and I'll dive into, here we go, cryptos, Bitcoin, and we can see what happened overnight. Let's take a look at it on the weekly chart, actually, because we're getting to quite a significant level. This level from the swing high back in December 2017, we peaked out at 19,666, almost a digit away from the famous World Cup win for England in 1966. We spiked down to 20,816, have recovered ever so slightly, but still under pressure. You can see where the real volume areas are and where we should find a little bit more support, anywhere from 20,000 down to around about 12. So there's potential for that this week, I have no doubt. Overnight's price action looks quite positive, however. This is a nice little start to the day for the bulls. They may gain a bit of confidence with this, but you have to get the follow through. This is in the midst of forming a bullish hammer where prices have sold off quite aggressively and then reacted back to where the open was of the candle and closed a little bit higher, if that forms a bullish hammer, then there is a little bit of hope in the short term for Bitcoin, but only in the short term in my eyes. This is a typical example of a 4-hour bullish hammer. You've got the bullish hammer and then you have the positive move afterwards. It's a nice little reaction higher. We got a reaction up to 23,300. We're settling down about 500 points lower than that currently. Others, Ethereum got down to flirted with the $1,000 level on a long-term chart. How does that look? Weekly chart. Not really any significance. That it's already taken out one of the major levels of the of 1420. That was the previous swing high in 2018. So not looking very good for Ethereum at the moment, really on the back foot. And XRP Ripple, that's getting down towards its actual real volume area. So this is where a lot of the volume has taken place in Ripple, down at 22.65, trading at 31.70 at the moment. So enough of cryptos. Let's dive into commodities. There's been some interesting moves in commodities. We saw oil prices spike higher yesterday. Looking at the weekly chart, actually, let's take a look at the daily chart. This might give us a little bit of a better indicator. We are seeing a little bit of a toppy formation. We talked about this at this last week, actually, where prices have stalled at 121.30. We've seen a couple of negative days. Yesterday, we saw a more positive day. We did see the spike higher initially. That was sold into. Prices moved lower and then recovered in the afternoon, and we've seen a little bit more positive price action today. So the grind higher in oil seems to want to continue. Didn't get as close to the 21-day moving average as we have done before. So that's a sign that the bulls are still pretty strong, pretty evident in this market. So I wouldn't want to argue against it. Gold, however, saw a real big turnaround, a bearish outside day in gold, which is pretty significant in my eyes. We managed to break the resistance at 1875, only just, and got up to 1880, and then the turnaround. And that was quite an aggressive sell-off along with the stocks. We talked about the risk of this two-way action in gold, where we've got strong dollar impacting on the downside for gold. And also we've got the equity markets under some pressure. So there'll be a little bit of safe haven dripping out of the equity markets into gold, which is obviously one of the best safe haven assets. So covering off that, let's take a look at the FX markets. Eurodollar, start there. We've had 3 negative days now, getting down towards that support level, coming in at 103.50. If we look further out in Eurodollar, that's not bad because that's sort of like at that swing low. So that's the level to watch. 103.40 is the real support level. That's the one to watch. A break below there, I think it opens up a move or an assault onto parity, which was talked about many moons ago. Well, almost 5 years ago, we were talking about the potential for a move to parity with the euro against the dollar. On cable, that's been supported slightly better. It's also got decent support below. We had this move down on May. So a couple of years ago now, we had the move down to 120.75. Currently trading at 121.60. So it's only 85 points away on the downside. Should hopefully find some support there. But again, this still looks to be in the midst of a real bearish move. The dollar strength seems to be unabated. And this shows obviously with the Dow, dollar yen. This is the one I faded yesterday in the gun to head. We'll show how that played out. I think I ended up a little bit on side at the 9 o'clock close, and we'll see Jamie's as well. So yeah, that's looking still looking pretty strong. Here we go. Here's the gun to head trade. So we have sold off, rallied back, a little bit of a correction, and looking a little bit toppy again. So that might be worth another little dabble this morning, especially with these multi-year highs that we're seeing, you know, highs we haven't seen for 20 years, maybe worth a little bit of a fade on a short-term basis.
Yeah.
And yeah, this is pretty much, let's take a look at how the Dow has fared. Not a very good week for the Dow, really. We've had 4 days of really horrendous negative price action. Prices not seen now since February 21. So really is giving up those gains. Now, looking from a technical perspective, let's try and get some focus on where we think our, let me just get rid of a few of these background lines to make it a little bit clearer. And let's draw a few Fibonacci lines in there. So even a move to sort of just below 30,000, 29,600, so another 900 points lower, and we'd hit the 38.2% fib retracement. So that would be a normal correction in markets.
Yeah, I was going to ask you, Steve, what as a percentage, what's that off the high of the Dow? Because I think percentage-wise, it is quite a lot, isn't it? But obviously, a move back to 38.2, as you were saying, isn't that crazy. But sorry, I can't
17%.
worry. 17, that's not too bad. It feels like the world's kind of ending though.
Yeah,
But
exactly.
really,
Yeah.
it does feel like that's more of a normal correction. 17% and down to 38 fib. It's like,
well, I
that's
think
pretty
sort of
standard.
like, yeah, exactly. And one of the if we go back to the start of the pandemic, that was that did feel like the world had ended. And we saw a 40, just under a 40% sell-off.
Yeah, and that was so quick as well, wasn't it? So I guess that adds to the fear of it.
Yeah, exactly. And so 40% sell-off from here. We're looking at a move down to there, and you know, yeah, but actually the pace of the move obviously has a lot to do with it. But as you see, you know, this might be the start of it, Jamie. You see this, like we had these like this week. If we go back to here, or I highlight it even. See that move there? We saw that could be very similar to this move. So you know, that was however much it was. Again, that's like a 12%. 15% sell-off there.
Yeah.
So you get the initial move, you think, oh, that's it done, turn around Tuesday, and all of a sudden you're met with a complete bloodbath. Yeah, I think there's a lot more to play out. There's a lot of things going on. There's a lot of real reasons for these stocks to sort of like find their true valuation instead of these inflated levels that we've been seeing for so long. There isn't the support of the QE. There's inflation issues. There's interest rate concerns.
There's a lot going on, isn't there?
Them sort of things weren't there back in 2020. So we could see a major correction, and it could be something that none of us have ever seen before. So let's be very sort of like careful in how we sort of like approach these markets. On the Nasdaq as well, that's broken down. That's got down to levels we haven't seen since November 2020. And again, if you think about where this has come from, again, it's a similar sort of thing. Let's take a look at a realistic pullback. We've gone through the 38.2%. So this is obviously a little bit more into it than the Wall Street. The Dow 61.8 is coming in at 10,500. So again, 900 points lower. It doesn't have to take that long to get there. Obviously, we got to think about, I think sort of like Nasdaq may have got quite close to its limit down level yesterday. I think limit down is about 5% or something like that. I'm sure it was trading down around that at some point yesterday.
Close. Yeah.
So yeah, they're the that's me. Just a quick look at maybe at DAX. DAX has was obviously sold off a bit more aggressively in March this year. So if anything, these sort of like Europeans have sort of like held up pretty well compared to the US counterparts. And but yeah, I believe further downside in all the indices in the current market. So
Yeah,
we
no,
will
I tend
see.
to agree. Right, shall I jump in with some stocks?
Yes, please.
Okay, here we go. As you can see, I'm not on my usual setup, so hopefully we'll get through this unscathed, but let's see. Starting off today with our biggest loser of yesterday, we have Revlon. I think this was actually one we looked at. Was it the day before? I think we looked at this yesterday, didn't we?
Yeah, we did. We talked about the makeup, didn't we? Yeah.
Yeah, we did. But I think unsurprisingly, because a lot of stocks did, we had this gap down and then a further sell-off. Let's have a look at what the volume looked like on that, and you can see, look at that. It's really starting to pick up now on these sell-offs. A lot of people trying to get out of their position.
Filing for bankruptcy or something, isn't it? I think that's what the news was. Yeah.
If there's any updates on here, Revlon more than 45% on media reports that's preparing to file Chapter 11 bankruptcy. Yeah, so that's clearly not something you want in a stock you're investing in.
No.
Yeah, no, certainly not. But on the flip side of that, we've got Dawn here. Day one biopharmaceuticals. We always know that these can have crazy moves. Let's see if this has a reason. It was up over 125%. Do we have any? Here we go. Day one biopharmaceuticals skyrocketed about 126% after releasing positive initial data from a mid-stage trial of, I've got to stop doing these biopharmaceutical companies. I can't pronounce anything. Tovorafenib in relapsed or progressive pediatric low-grade glioma. So I don't know what a lot of those words means, but I'm sure someone out there does.
I think it's a cancer-related stock.
Right.
Well, that sentence sounds cancer-related.
Yes, it did. And we've actually formed this doji. Look at it, it's actually closed exactly where it's open, which you don't see all that often on these huge gaps up that it closes where it opens, but it has done on some pretty big volumes. So a nice move there. I thought we'd check in on our old friend Box, which I don't know what else to say about it. But we looked at this at the start of last week, and it has been down pretty much 20% each day in the last 5 or 6 trading days. And you can see the volumes picking up. Do we have any extra news about this? Not really. But that was 6 days ago. Box shares hit record lows. So
6 days ago, Box to join Russell 2000 from June the 27th.
I did see that. I think we actually discussed that last week and thought maybe they want to reevaluate. I don't know if they can reevaluate if it's all signed off. But yeah, look at this volume as well. It's awful. It's gapping down day after day. Closed at 162 yesterday, and I wouldn't be surprised if we saw another 20% move down today, but that remains to be seen. We'll have to wait and see on that. Jumping in the heat map, and it's as you'd expect with how the indices looked. You can see it's just dark red again across the board. This is about, I think, the 3rd day in a row we've looked at the heat map, and it's all been dark red, which suggests minus 3% or more down move on all these stocks. We can actually get to the point now where we can do ×2, which is a cool feature where actually what happens is the dark red will be up to 6% losses. So we'll click that, and even doubling it. I've zoomed in by accident there. Even doubling it, you can see Amazon, Meta Platforms, Nvidia, Tesla is all still in that dark red. So Nvidia was down, what's that, 7.82%. Tesla down 7%, Amazon down 5.45, sorry, and Meta down 6.44. So a pretty rough day, and a lot of the charts, the day's trading on the charts looks very similar. It doesn't really matter what stock you look at, it's just a gap down and then closing at the low of the day. We'll jump into a few. Obviously, Coinbase was hit pretty hard yesterday, recovering a fair bit of its initial losses. So this could have actually looked a lot worse, but obviously cryptos were really struggling yesterday. And that was reflected in Coinbase. But if we take out the percentage, we actually opened about 21% lower, 22% even. And we did recover a lot of those gains towards the end of the session. But that's 3 gap downs in a row now, which isn't completely uncommon. We're seeing that across the board. Quite a key level, though, for Bitcoin at the moment. This is the kind of recent lows we got to after that last big sell-off. On a weekly chart, let's just pull it out and see what we're seeing here. So you can see we gap down. Not a lot of structure down here, honestly. Certainly wouldn't want to be closing around these levels, because I mean there's just nothing really good to say here technically. And as we looked at the cryptos earlier, there looks like there's further room for downside on a lot of these coins. And we looked at Bitcoin and Ethereum, and there's a lot of open sea ahead. So nothing I like here on Coinbase. I think there's probably some room for further downside on that too. Which again, that's not going to be an uncommon sentence. We look at Plug Power here. One, we actually managed to get in on quite a nice level, ping this 61.8 fib from a recent swing high to the recent low. And I mean, if you can kind of recently, if you've managed to get into any short positions and hold them, you're probably doing quite well. So this one's moved quite nicely in the direction we hope for, and is looking to head back to that swing low. So that's a 2.93R move we're looking for there. It's going quite well. We'll check in with Novavax. We've looked at this a fair bit over the last month or two. If we load, here we go. And I think, again, this was an idea we put out. To me, this looks like one that has a lot more room on the downside, which, like I said, isn't completely uncommon. We're not actually in this trade. We didn't get triggered. But if I zoom out very slowly, to me, I think there's not a lot. I think because we had this, I think what's interesting about Novavax here is we had this week here where we had this really quick move down in February of 2019. And over that same kind of price, we had a pretty quick move up. So there's not been a lot of trading in those areas. It's been pretty speedy moves. So I think this has got a lot more room to move downwards. And I think that this 22.96 target I've written there is perhaps a bit conservative. I think it could certainly go a lot lower than that. We'll move on. We're checking on GME. I know everyone likes looking at GME, and I'm not quite sure how this is still trading at $118 a share. I'm dragging something somewhere, but down 8.4% yesterday. We gapped down. Actually held up not too bad compared to a lot of the market. So I think, Jimmy, next stop we're looking at, again, probably heading down to this $80 support. And that's a really important level. I think there's obviously better people to go to with like valuations and the fundamental sides of these stocks. But from my limited knowledge on it, I think $118 is probably a bit expensive for GME. And also knowing a little bit about what the business is and what they do, it seems, I'm not going to say outdated, but a lot of these things with gaming and PCs and all that stuff is now pretty much all done online. So $118 a share seems like a lot. We'll see if that does eventually come down. It's been chilling up here for a long time. So maybe this will be the catalyst, this recent market retracement / bear market. Moderna, I'm not sure we looked at this yesterday, but that was one we put out, quite a nice one again. We managed to hit profit on that. 3 really bad days in a row there for Moderna. And like I say, a lot of these stocks have had gaps down over the last 2 days, but yeah, it's broken this recent support we had here. It's actually gapped through it, this 125. Again, I think if we take this out to a weekly chart, you can see the significance of where we are now. I could try and extend this support across. Here we go. You can see we actually found the support over here. There we go. We'll just leave it there. So if we were to get a close down at this level, and the volume will be interesting as well, that to me could argue this is a bit of a head and shoulders pattern as well. I think we looked at that a while ago, and certainly this recent price action looks like there could be a sharp move lower coming in. And I think perhaps the next technical target you can look at, there'll probably be some fibs, but also this level of support we have back here at about $60 or so, which would be a pretty considerable move downwards if we were to get there. We'll look at a couple more. I think Apple had a pretty significant daily close as well yesterday. I've marked that for a reason. Yeah, you can see here we've gapped through this support level that was holding up quite a considerable gap down. Actually, I mean, look at that. That's really not looking nice. The volume's picking up. You can see these big red distribution days. And the volume yesterday as well, it's really starting to build up now on these high selling days. So from a weekly perspective, obviously it's only Tuesday, or I think it's Tuesday. I sometimes lose count. If we start looking to close round down these levels, I think we've got a long way to go. We've had this triple top pattern play out. I mean, we'll finish on Apple, but we'll quickly have a look at we'll put on a fib from the COVID lows and see where we can perhaps look to target on a move to the downside. Bring this up here. Let's try and get that right. There we go. So we're at the 38.2 fib now, which is again why this is quite a key level. I think if we get through that, we got 61.8 fib down at 100. That could really be the next stop for Apple. I feel perhaps it won't get there overnight, perhaps it will, but I think that wouldn't be a surprise to me with how generally I think, and circling back to what we were saying earlier, Steve, there's a lot of different factors at play at the moment that are now affecting the price of not only the general market but these individual stocks. And I feel that perhaps, although like I said earlier, people like it feels like it's the end of the world, it could just be the start of the end of the world in terms of, I don't want to be kind of saying too much on it, but I think there's certainly a lot of room for downside, and a move back to $100 wouldn't be an awful thing. It obviously it's still a fair way away, so that's still from where we are now, about 22% move. But in the grand scheme of things, that's not a. It's just a bit of a pullback. It's a deepish correction, but I think this week could be the week where if we do get these closes below the key levels we're at and around, which looks like we will with how the markets are acting. I mean, we'll see how the week plays out, but this could be like that next step for the markets moving considerably lower. So we'll see how it all plays out.
Yeah, I mean, valuations just have to normalise in my eyes. That's as simple as it is. And, you know, these inflated prices that we've seen over the last few years have been quite incredible. So, none of this is a huge surprise. We've been talking about it in this show for a lot longer than some other people. But just had a sort of like a note from one person on TradingView, just asking to look at NIO. So NIO does batteries, doesn't it, for motor vehicles? Just having a little look at this from a technical perspective only. So I don't need to know what it actually looks at or what it actually does. But we can see this sort of on the weekly chart, the pretty horrendous rejection that we saw last week. And we've actually gapped down this week. So this is under severe pressure. And ideally, in an ideal world, you'd fill that gap before you kicked on. So let's take a look at the daily chart, see what that looks like. You can see there's sort of like this. This is pretty. You don't want to see this at any point in the market when it opens up here. This is a sign that you've got an abandoned baby. And that it would be a sell indicator on this day with your stop just above. And then this has followed through, and we've had another gap on the charts, and now we're down below the 21-day moving average. So really on the back foot. No, from a technical perspective, this is remains pretty negative and doesn't look good for the rest of the week. Where can we find support? We can find support a bit lower down, around about the $14 level, and obviously down at $11.60. That would be, for me, there would be a target here. There's a little bit of a gap here, potential to fill. It would be nice to fill it, but even if it fills this, there's still this gap up here. So for me, this is more chance of reaching the 11.70 level than it has of getting back to $20. If that sort of helps. Hopefully that helps. So let's move on to the part of the show where myself and Jamie pick a trade idea, any trade idea from any market, and we have a whole day to see how that plays out. It's called a gun to head challenge. We pick an idea live on air, and we have to place a stop and target of at least a 2-to-1 risk reward ratio. And those trades are published live on our platform, on our TradingView platform, for you all to see and to laugh at later. The trade ideas expire at 9 p.m. or when the stop or target is hit. We can take a look at how we got on yesterday. This is always interesting. So Jamie's got ahead. He was buying FTSE. Was that right,
Yeah, very
Jamie? You're
speculative.
buying
I
FTSE
was,
yesterday?
yeah, I was.
At one point, this didn't do too bad, actually, because I saw at one point that there you go. Doesn't look
Getting
too
on.
bad.
Yeah, it wasn't horrible. I could be one
No,
to try again, you know.
yeah. Do you reckon? Well, you can do it with your account rather than my account.
I don't
I'm
know. Is
Mr.
that's
Bear. I'm
well,
Mr. Bear at the moment. But
yeah,
yeah, you didn't get stopped out. Looks like it closed around about. It's difficult to see on this because it's on a 4-hour chart. We'll have a closer look at that. We mark them all
yeah.
up and we'll
I'll
show
try
you
bring
the
it up.
results tomorrow. Joe's back today, so he'll be spending all day trying to work out the mess that we've made. I went short of dollar yen and it played out pretty nicely. I actually had a really nice move towards the target during the
Yeah,
day, but then pulled back and closed probably about 0.8 R on side before it's revisited. And as I say, it might be something that I look at again for today's trade idea. So I don't know if are you ready with anything at all, Jamie, or do you want me to dive in?
if you could dive in, that would be good. I need another second.
Yeah, I mean, I will have a quick look again at. Let me get back to my charts. Oh, I think I might have another look at dollar yen. Just because look at the price action we're at 20-year highs. Look at these dojis, indecision. Has it got enough? The dollar's trying to push through, but I think it's really good risk reward fading this here. So I'm going to go for the same trade idea as yesterday. Here we go. And if we get a break there, we can sort of like see further downside. That'll be that would have been that double top. So this is taking it out anyway. So that would be a bit unrealistic on the day. Can we get a 2-to-1? We can just about squeeze a 2-to-1 risk reward trade out of it. We can. Let's do 550 and 1100. 2-to-1 risk reward, quite a straightforward one. Selling dollar yen here, 134.39, targeting a move to 133.29. That's 110 points on the downside, and stopping out at 134.94. So that's 55 points on the upside. So my stop is just above the price action that we've seen over the last few hours. And yeah, that's my trade idea of the day. What have you got, Jamie?
Very nice, Steve. I am muddling my way through. I've looked at about 10 charts because my computer finds it very intense doing the streaming and looking at charts. There's a lot going on, so it's got to take its time. But
Sounds
what
like
I
a lot of
have,
excuses to me.
it's a lot of
I think you're
excuses.
running scared at the moment.
But actually, funny enough, last time I had this situation when I was at
You did
home, I
okay.
found a nice 3-3R winner. So
Go
I'm
on then.
gonna hope for the same again. This is nothing flashy. I've just found a resistance level that's been holding up. It looks like it's under a lot of pressure, but I just, like I always say, just needs to hold till about, well, exactly 9 o'clock. So I'm going to try and sell this. This is the euro against the pound, by the way. I should have led with that. We're at this key resistance. Imagine this box here is red, not green. It doesn't want to change right now. I'm just going to hope for a move to the other side of this range, all the way down here, so I can actually get some really nice risk reward out of it. All right, let's start typing some details. So yeah, nothing flashy. We're just in a bit of a range, and I'm going to hope that range continues today. So the entry price at current price, which is 0.8581. There we go, excellent. The profit level is going to be 0.8494. There we go. And the stop, scroll down. I'm going to keep just above this, but we'll make it 0.8602. So that gives us, I mean, whether it will move all the way down to the low of this range, it's probably unlikely, but it's worth a go. It gives us a nice 4.14 risk reward. So looking for a bit of a sell-off on the euro against the pound today.
Nice one. Excellent. I've just published mine. There we go. It's gone. It's there for all to see. It's just slightly on side as well. Take a quick profit and hide my embarrassment and cancel the trade idea, but I won't do that, of course. So let's take a look at what to expect for the rest of the day. US producer prices later on, 1:30. Key events for the week. Obviously, we've got lots of central bank action. We've got US retail sales on the 15th. That is Thursday. That's Wednesday. And then we've got the Federal Reserve policy decision later that evening, UK time later that evening. And we've got Swiss National Bank policy and Bank of England policy decision on the 16th on Thursday. So lots to look out for. And I think lots of volatility to continue this week. So be very careful out there, be very safe out there. And yeah, good luck with trading.
Yeah, it's tough environment. Good luck, everyone. And we'll be back and see you tomorrow morning.
Cheers.
Bye.